Hi, my name is Amy, and if you're new here, I am a 5 months in day trader. I've been pretty much very consistently day trading during those 5 months, going all in. This is my sole focus. If you are interested in how I've learned to day trade thus far, I have a link down below. It's a free Google Doc of my day trading resources, and it's basically all the books, all the YouTube videos, people I've followed on YouTube that have helped me on my journey thus far. So feel free to check it out, description or comments down below. So today's video, I am reviewing my last 20 day trades to kind of give you a synopsis. You know, was I profitable? Was I negative? How did it go? What did I learn? I am a huge fan of Mark Douglas, and he wrote The Disciplined Trader as well as Trading in the Zone. And there's a video I put in my day trading resources that really just changed the game for me. He talked about the idea of having 20 trades as your template, as your gauge of how you were doing, that you should stop taking the focus off of daily or weekly trading or each individual trade, because what ultimately matters is the metric of 20 showing you, okay, you may, just randomness, you may have 10 winning trades and then you may have 10 losing trades. You might have, back and forth. And like, let's say, for example, that you looked at your stats over just like your last 5 or 10 trades and they were all negative. You'd start to think, okay, there's something wrong with me. I'm losing my edge. I'm just not winning. Something is very wrong. But if you looked at actually your last 20, you would have a different picture. And part of the reason I decided to kind of look at my trades in this manner was to also help eliminate issues around trading that are psychological, fear of entry, fear of exit, fear of losing money, fear of, not taking a profit at the right time or staying in a trade too long, whatever it might be. And these last 20 trades were kind of a mix of testing different things. I was buying between 1 and 10 shares per trade. I was testing out new things, realizing that I am a scalp trader, and that I switched from trailing stop losses to hard fixed stop losses. And in recent trades, pretty much about 3/4 of these 20 trades, I was experimenting with having multiple stop losses where I would buy into a trade and I would set different like a 10 cent, 15 cent, 20 cent stops each time I bought into a trade. I was also practicing scaling into winning trades versus, I never like to average down. I learned from this book back here, Best Loser Wins, that you're supposed to add to your winners, right? This is how you gain profitability over losing money. So I'm really trying to work on these different things as I'm trading. And these last 20 trades, I'll give you kind of the stats of where I'm at here. So I told you I was buying between 1 and 10 shares. So I'm trading very small position sizes. Some of these trades, the day I traded, I was like, today's a practice day. So I was buying like 1 share, and some of them I was doing 2 shares a piece, 3 shares a piece. And there was a couple, I think I did 5 or 10. So it was it was a mixed bag, And like I said, using fixed stop losses, I traded these 1, 2, 3, 4, 5, these 6 ticker symbols. AAPU, which is the ETF for Apple if you're going to go long for Apple. So I like to trade ETFs over the actual stocks that are in the Magnificent Seven because they are way less priced. So you don't need a ton of capital, right? And also because you can get these nice scalp moves off of them without them being as volatile as, say, buying like Tesla directly, where, you could have a average true range in a 5-minute candle of like $1 to $2 sometimes. With an ETF like TSLR, it's more like 15 cents, 20, 25 cents. So it's just, I think for trying to work on a strategy and to try to get better at scalp trading, which is what I'm focused on, it's just working well for me to stick to that. A lot of people ask, do you do futures? Do you do Forex? No and no. I stick to what I have done since the beginning almost. And because I had successes and wins early on, I decided to just focus on what's already worked for me. This might be different for you. You might be already doing something and you've had some wins. And what I tell people is just go with what you feel comfortable doing and what's already worked for you. This is the best thing you can do. Just stick to what works. Don't jump around. Okay, so AAPU, TSLR, which I mentioned, is long for Tesla ETF. TSLQ, which is actually short for Tesla. So if you're predicting, the ETF, or excuse me, the stock is going to go down, that's the one you would buy, because though you are wanting that share price to go up, you're betting that Tesla's going down, right? So you get to short without having to use margin. PLTD, which is the bearish ETF for Palantir. NVDL, which is the going long for NVIDIA. And PLTU, which is the going long for Palantir ETF. So like I said, I think it was 6. 1, 2, 3. Yeah, 6 different ETFs. They were all ETFs that I traded in this particular 20 trade series. Sometimes I will buy the direct stock. Like for instance, I've bought Palantir directly in the past, although I feel like it's a little out of what I like to trade because it's in the $80-some range. I prefer trading things that are like $50 or less, $60 or less, because the way I've got my stops set up and my custom templates, it just works better. Then I don't have to overthink and be like, oh, I got to change my stop and make it wider because this, share price is more. So anyways, what was interesting when I broke this down of these 20 trades, first things first, literally all of these tickers, I was red, as in negative on, or with the exception of PLTU, which was the long for Palantir, that one I was break even. All of them I was red, I was negative on, except for TSLQ, which is the short ETF for Tesla. Literally anything I tried to go long on, basically I lost the trade, on average. So go figure. I kind of see that as, TSLQ, it's a little bit more priced, higher than some of the other long ETFs, like TSLR is like $12, $13. TSLQ can be anywhere from $40 to $50 a share. So sometimes you get those moves in your favor and you don't have to wait for a large gain to happen, to be able to take a profit. So that was one of the things I noticed. And I think just the way the market conditions are right now, that the volatility, the uncertainty, that it is in all probabilities more likely than not that stocks will go down versus go up. Now, that doesn't mean to say there's not points in the day where, you might see Apple shooting up, NVIDIA shot up the one day, Palantir, whatever it might be. They will have their moments. But for me, the type of trading I like to do in these momentum moves, these lots of volume, quick, energetic, bullish engulfing type candles, whether it's one way or the other, or I should say engulfing candles, that's going to happen more likely when a stock is going down, because the sentiment right now is like I said, uncertain. It's more likely that things are going to tank faster than they are going to spike up. So I just, based on my own trades of these last 20, I saw that I was only green on TSLQ, which was to me just really interesting. So that one, I used stop losses ranging from 15 cents, 20, 25, and I think the highest, there might have been a couple of trades where I had a 30-cent stop. In most cases, though, when I took a profit, it was somewhere between that 15 and 25 cents for that gain. And then this one, so if I break it down as how many trades were green and how many were red. So I had 10 green trades. I had 1 break even, which was the PLTU, and I had 9 red. So for my purposes, I got encouraged because in the past, I had a tendency to have to make way more winning trades in order to come out, on top, with a profit. And in this scenario, what ended up happening was I was profitable. I had an average win of 58 cents per trade and an average loss of 53 cents. So there was a gap I am, up more than I'm down, and the total like full amount, I was in the profit of 43 cents. So nothing crazy, but you have to remember too, I'm only buying between 1 and 10 shares. And in most cases, it was more like 1 to 3. Now, some trades I would get into and I would buy in a couple of times. So I might have 6, 9, or even up to 12 shares in that one trade. But yeah, so you could just, like, you see how tight my stops are and everything. So that's why I'm not even up a whole dollar. But I was just pleased because, it was just interesting to me. And kind of, this is another interesting thing, was the last few days I had thought I wasn't doing great. It felt like I was losing more than I was winning. It felt like it was just back to back red, red, red. There was a handful of green, trades, but mentally I'm telling myself, you're off, right? But when I actually looked at the facts, the stats, I was like, wait a minute, I'm actually doing pretty good. If you were to spell out the trades of the 20, it was green, red, green, 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 red, green, red, 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 green, green, red, red, break even, red, green. So your brain will try to trick you sometimes. I think it'll try to like focus on, first of all, the negative. Second of all, it will also try to focus on the most recent activity, in your memory. And meanwhile, if I hadn't gone back and looked at these trades, I would have completely forgot about that big green streak. It also tells me, though, that this is randomness, right? These are random outcomes. I'm doing my best where I'm at, 5 months day trading, to try to go for the best setups, to be patient in the market, to wait for the right, time to get in. Now, I will say some of these red trades towards the end, I will say that I was jumping in more so in ranging markets, which I don't do very well in. And I was trying to work on that and just be more patient, wait for setups. But I mean, maybe you guys have seen this too. The last couple of trading days, it's just been very bouncing back and forth. It's like freaking ping pong. It's just up, down, up, down. You'll look at even like 10-minute candles. I mostly use the 3-minute candle, by the way. That's something I think that helped me with these trades as well, was using the 3-minute instead of my normal 5. But when I would back out a little bit, look at a 10-minute or a 15-minute candle, just to kind of get like a gauge on what's happening in the market, a lot of times it's red, green, and there's no clear direction, right? Like overall, there might be some sort of trend for the day, but there's not necessarily these sustainable trends that I would normally see that I could jump on with confidence. So I do think some of the red trades, like I was, over trading or just trying to get in because I wanted to trade, and I wasn't being as patient with these ranging markets. And some days, I probably should have not even taken a trade because it was just like that the whole time that I was trading. So, okay, so what was working, I think, for me to end up profitable? And I'll also say this, I went back the last 40 trades. So I did these 20. I looked back at the prior 20 before that. I was negative on those ones. And I took some bigger losses on those ones. And what I learned, what changed it for these most recent 20 trades, was that I was using a fixed stop loss now instead of a trailing. My trailing stop loss, I used to do 75 cents. So it's a pretty big difference between having that versus having a 15, 20, 25 cent stop. And that was something I instantly picked up on. The other thing I noticed was that I was quicker to exit trades that had gone against me. So in the past, I kind of used to feel like, maybe I'm not being patient for this to play out. Maybe I'm jumping out too soon, whatever it might be. But I came up with a 3 strikes rule, and I've been trying to follow that, as well as to put a time frame around it. So my 3 strikes rule of like when to exit a trade is that I see that the stochastic oscillator, which is kind of like the MACD, but a little more or I should say a little less laggy. That one, I look for the signal line to cross. So if I'm going long and the signal line starts to curl and actually crosses going down, that's definitely one of my, okay, look to exit. And vice versa, if I'm going short and it starts to cross up going, this way, look to exit. The other thing is reading the tape. If I'm consistently seeing higher and higher prices kind of falling into that range of it bouncing around, then, I kind of set like these little parameters for myself. I might say, oh, okay, it's at the 50 cent mark. If I start to see 60s, 65, 68, 69, maybe that's time to get out. But if I start to see 40s, and then down to 30s, maybe I stay in the trade. So I kind of like try to read the tape just to kind of get a feel of where does it feel like price is going. The other thing is watching the candles. So I'm on the 3 minutes chart, and typically I wait for the close of a candle to kind of determine, okay, where we at. Now, sometimes what I think was an issue for me with some of those red trades was candles being stuck around the VWAP, or actually even more likely these last few days was it's stuck around the 9 EMA, and you would have uncertainty. Like, is this candle going to close above it or below it? So I tried to wait sometimes for the candle to close, see where it was at, and decide whether I'm going long or short. In some cases, it would be a false thing. It might close below the 9 EMA, so I think go short. And then the next candle would go back up over it, stop me out maybe. And, like I said, it was, it's ranging, it's choppy. So I'm working on that for my exits. But yeah, I think one of the biggest things for exits is my stochastic and the time frame. If a trade does not go my way within 60 to 90 seconds, typically for the type of quick moves I'm looking for, quick scalps, I know to just get out of the trade. Either I got in at the wrong time or things are changing and I need to get out. Like, it's time to just cut and run. So that's a lot of what I was doing on some of these, where even if I took a loss on that trade, it was minimized because many of my losses were way less than what I was willing to risk. So like, for example, if I was buying like 3 or 5 shares or something, maybe my max risk would have ended up like $1.50, $1.60. Some of those trades, I was only losing like 30 cents, 40 cents, because I was quick to cut my losses, get out. And I've been steadily working on trying to increase the wins, of course. Now, with some of these fixed stop losses, I'm just going for a 1-to-1. Like, if I risk 15 cents a share, I'm trying to take 15 cents a share. I'm really just trying to hone in right now. And as I get better, as I overcome these challenges of staying in the trade a little longer to get more profit, it's a mental thing sometimes because you want to hold on to the gains that you've already got. You don't want to lose that, right? But again, from Best Loser Wins behind me, he talks about, this is the way to become super profitable, is you have to get uncomfortable. And you have to be like, okay, it is quite possible I will give back my money that I'm up. But this is also the way that I can gain more, by holding on. And if I don't have my 3 exits, 3 strikes rule, if those aren't all being met, then I try to tell myself, stay in the trade, stay in the trade. Even if it looks uncertain, stay in the trade. And if things don't turn around fast enough, it's a time factor, then I'm like, okay, now it's time to get out. Anything else? Let's see. I did put 2, and I think I started doing this maybe on the second half of these trades, was I'm trying to force myself to wait for a minor pullback before jumping into a trade. Sometimes I used to just jump when I saw momentum, get in the trade quick, and other times now I'm kind of like, okay, a lot of times you jump in those trades, you're getting in too high. You got to wait for that sort of breather moment where the stock might come back down a little bit. That's where you get in. It's still going up. And if you're going long, it's still going up or whatever. But you need to wait for those micro pullbacks in order to get the better entry price and not get stopped out so quick. Yeah, and then the other thing I noticed too, like I said, I switched to the 3-minute chart. I'm also using Bollinger Bands sometimes to help me to see where levels are physically, like on the chart. Some mornings I'll look at the stocks I think I'm going to watch for the day, and I'll try to find the technical levels, support, resistance, open close, pre-market high, pre-market low. And sometimes just having the Bollinger Bands on the chart just kind of shows me, okay, where is a potential range, especially if you don't have VWAP or a 90 MA anywhere nearby, because that's happened to me a bunch of times trading lately. It's like there's nothing to go off of. So I might put the Bollinger Bands on just to kind of help guide me, to like, oh, where might this go, right? And then the last thing I noticed was I've been listening to music while trading. I've stopped listening to any other traders. I don't watch anybody live trading. I'm learning to just trust my own gut, trust my own instinct, because right now I think that's the most important thing, is building that trust with yourself. As a newbie trader, you are willingly exposed to a lot of different opinions, people's advice. You watch a bunch of YouTubers, you read books. Everybody's got their own methodology, their own strategy, their own thing that works for them. And it's not to say anybody's right or wrong. It's just that's what worked for them. And it may or may not work for you. So you got to kind of take it as you go, use it. If it doesn't work, you discard it, you keep what does work. And I think right now I'm just in that zone of let's just hone in on the things, the small little things I see working, and just improve, refine, keep going, and be willing to experiment. A lot of this trading I did in these last 20 trades, they were experiments, trying different share sizes, trying different tools and different chart, 3 minute instead of the 5, and also looking at the idea of, scaling into winning trades and having multiple stop losses in one trade, because that gave me an idea of like, hey, maybe I think I'm getting stopped out because of XYZ, but really it just, I didn't give myself enough room, or, maybe I realized that my entries are too far off or something like that. Like it just showed me that I should be willing to experiment and try different things, and also give myself more chances to win, right? If you go in buying share sizes and you've got a 10 cent, a 15 cent, a 25 cent, a 30 cent stop, on each different buy-in, you give yourself an edge, because some of those might not work out. I mean, there's potential that none of them will. You get stopped out on all of them, but some of them might work. And that was the case for some of these trades where I had like 3 different stop losses. 2 of them I got my take profits on, and like maybe the third one, it started to turn against me, and I would manually exit, sometimes for a loss, and the third one, sometimes for a gain. But it gave me that edge. It gave me that chance, at least, to win. So anyways, guys, I hope you enjoyed this analysis of my 20 trades. Are you doing anything similar? Do you go back and look at your stats? Let me know down below. I'm just curious how other people gauge, what's working, what's not. For me, looking ahead to the future, I'm going to keep tight with my risk management, because that's really working for me, and also just try to stay in the winning trades a little bit longer. If I don't have the 3 strikes rule happening, then I'm going to try to hold on to those winning trades a little bit more. So feel free to check out my day trading resources down below in the description or the comment section if you want to know more of like how I've learned what I've learned thus far in month 5, and I'll see you in the next one. Take care.